It's been 7 months and Bitcoin has barely moved a single cent. That's exactly what has happened in the markets over this period. But as we would expect from the media, they've been shouting collapse, collapse, collapse. Essentially, the data is telling us opposite. And in today's video, I want to have a look at where we currently sit within the 4-year cycle, but make it a little more interesting than the typical 4-year cycle videos. We want to have a look at what is potentially coming up for 2024, price targets, time targets, based on our Gann analysis, and of course, 50% levels. We need to keep updating these particular charts as the markets continue to move. Well, in this case, 7 months has been sitting relatively flat. However, the sentiment has changed. It always changes. So let's dive into today's video. After you hit that subscribe and like, link in the top of the video description. You know the deal. It is our free crypto and economic report helping you through these tumultuous times of depressions and collapses and looming recessions. You know the deal. Let's dive into today's video. I don't need to bang on about that too much more. All right, so first up, let's have a look at where we sit with BTC. It closed at 28,400, so still within our short-term ranges. But of course, this is looking at the broader cycle here, the bigger picture, and where we can end up over the next sort of 12, 24, maybe even 30 or so months. Okay, so the market is slowly creeping up here at 28,600, but of course, yesterday's closed at 28.4, bang within that 50% on the short term. But you're not here for the short term. This is the macro outlook of the markets. We have the halving coming up next year. The halving is a few months away at this point. We have our 50% levels to hit in the meantime. We have time frames to take a look at. So let's scale it back and just see where we currently sit within the current 4-year cycle. But first up, the 3 years of the bull market. Now, of course, these are speaking in rough terms here because there is no exact date that the market will end. But a rough guide is probably the best thing here so that we can stay in tune with what the market is telling us. And as we see it, well, I mean, as the data is explaining, we are at the 11th month in from this low here. So you can see the cycle low, 11 months, that's where we currently sit. So taking a look back at the previous cycles, 11 months sits us somewhere around the first reaccumulation zone before the market moves up to the 50% of the bear market level. So all I'm showing on this chart is the bear market, the 50% target, and how long Bitcoin takes to get to that particular target. So at 11 months, we are roughly 6 or so months out from hitting that 50% target based on the 2017 cycle. The low was 2015, but most remember it as the 2017. So call it 2015, 16, 17. That's your bull market. But of course, the 2017 year was the mania of the bull market. Looking to the next cycle, so the low in December of 2018, basically your accumulation here, consolidation over 2019 and 2020. And then of course, your bull market was 2021. At the 11th month, we were just coming down to rest on our low, our high low, before the market started to climb up, and then give us a little scare, break the monthly swing bottom, and then of course it was quickly reversed and the market moved up, getting towards that 50% again just after the halving, and that took roughly 19 months before it hit the 50% level the first time. Then on the 20th month it hit it, 21st had a pullback, and then on the 22nd month, we had the breakout of the 50%. And the importance here is that you're now trading in the stronger half of the whole cycle itself. And you can see the strength really start to shine through in that second half. So that's why we're leading towards that, because from what we can tell, it's typically the mania stage. So this is what I think a lot of people are referring to as the bull market. For my count, the bull market starts at the bottom. You count it from the low, then you measure it to the top, then you measure it to the next low. Really simple to keep the rules very clean and objective. We've also got an objective view here at the 50% level, but you want to buy low, sell high, not necessarily buy when everyone else is buying and then hold it all the way down like everyone else. So this is the first stage of the bull market that we're currently in. And essentially, I think we'll get to some sort of the beginning of the mania in roughly sort of 6 to, if we take another measure here from when this broke out, that's 22 months. The test here was at the 17th month, and then the breakout here was on the 21st month. So it's possible that we test the 50% level, this 42K, in about 6 months' time, which is dead on the halving month. So that would work in quite well with the psychology or the narratives that, well, the halving's coming up, there's going to be less supply on the market, the Bitcoin starts to shoot up maybe a month or two beforehand, and we get closer to that 42K. Can it happen earlier? Of course it can, but I just want to look at the data that we currently have and then try to forecast the future. Of course, this is your home of macro cycle analysis. You know the deal, subscribe, like, let's keep going. So that was the first stage there, just looking 6 months ahead, because that gives us 17 months from the low, which, like we've looked at before, that was 17 months from the low to hitting the 50% level. We hit it in 6 months in 2019. Of course, that didn't happen this time around. So let's look towards where it hit in the previous cycle in 2020, and that was roughly around 19 months. So 17 to 19 months, that puts us at April, May, June of next year, getting that next test on the 50% if we don't do it sooner, getting towards $42,000. So we're looking at time and price targets here. Now, the extreme end of this move, let's have a look at this arrow right here. This one here is giving us the 22 months. So that takes us all the way out to September. Essentially, that was the time, as we just looked at, for the breakout of the 50% level. And again, the breakout of the 50% level occurred at 21 months. So if we're looking at about 21 months is August, 22 months is September, we could be seeing a test in the first half of 2024, and then a breakout in the second half of 2024, a breakout of the $42,000. That's where things start to get quite wild. You will still have bears, macro bears in the space saying, well, Bitcoin's going to come up to 69 or 65 and then do a double top and then collapse. We'll probably have some sort of pullbacks along the way, but we don't need to be sold on the fact that that is definitely going to happen. Nothing is a definite. So just remember that as we get to the tops, because what happened last cycle is we got to a double top and the market just broke right through that, did not even stop. It didn't even give you a chance to breathe at that double top and just kept going. Many were hoping and expecting a severe pullback. I was looking at a short-term pullback at that time. We got almost none of that. There was not even a pullback to 16, 17 or so grand. There was a slight few-day pullback here and then continued on. So nothing has to happen just based on patterns, but we're just looking at probabilities. So far we've got a time in mind and we have a price in mind going forward to next year, looking from, say, quarter 2 into quarter 3. So that's pretty good there. Now, what about the end of the cycle to the end of the top of the 4-year cycle? And of course, we'll still have that roughly 12 months to go to the downside, which is basically your 4-year cycle, low to low. We're not looking at this halving because it's not exactly a 4-year cycle. The halvings themselves have been getting slightly further apart. And of course, this is going to change over time, but if we look at the first one to the second halving, that was roughly 44 months. And then we take it from the second halving to the third halving, and that is roughly 46 months. And then again to the most recent halving coming up is potentially roughly 47 months. So it's not exactly 4 years, but of course nothing is exact, but it's roughly around that 4 years. But if it keeps getting extended out, then that might put a little movement in some of the timing of people who look only at the 4-year cycle being the halving cycle as well. For our 4-year cycle, it is low to low. We're looking here at Hurst cycles. That's what the low to low represents. So if we look back at the last cycles from that halving point, so from April, where could the top come into the market? So the final blow off top or rounded top, basically the top, the highest price. We're not looking at the first top, but the highest price. Okay, so the halving happened 17 months before the final top in 2017, and then the halving happened 18 months. See that here. There's 18 at the top here, 18 months before the final top in 2021. So roughly around that sort of 17 to 18, maybe it keeps extending out an extra month because the halvings are getting slightly longer there. If we look at 18 months from the halving date, that gives us a month of October 2025. If If we look at 17 months, that's going to be September. And if we take it out to 19 months where it extends a little, then that's going to be November of 2025. So basically exactly 4 years since the previous top. So all in all, we still have a fair bit of time to go before we hit that 50% level, unless we break through 32,000 quicker and then we start to base out and reaccumulate above 32, but potentially below 42 before we attempt to break through that level again. So of course, there are multiple options here. The main thing is it is almost guaranteed that 15.5K is not going to break. And potentially we won't see closes under the March low either, which is that $19,500 low, something that I've talked about for a long time on the channel now. So you could basically call it roughly 7 months. When that low came in, it looked relatively strong. And it has looked very, very strong for the S&P 500 in the traditional markets, which is something else that we look at for our 4-year cycle. Within the 4-year cycle, the main thing I want to bring up here is the S&P typically breaks to a new all-time high before Bitcoin breaks to a new all-time high. And we've seen that in the previous accumulation years. This is when Bitcoin's accumulating. The Bitcoin bull that I'm referencing here is when Bitcoin breaks out and starts to go on its mega run. And you can see the Bitcoin bull again here. This was October, November of 2020. That was the point where Bitcoin pushed in or touched new all-time highs. And then that was the entire bull run there. There's your bear run, and now we're in the accumulation. So when we're in these accumulation periods of Bitcoin, the S&P has shown a new all-time high multiple times. You could basically see once and twice, some clear 2 times. You got once here, which led to this, and then a second time again, which led to the Bitcoin bull market. We can take it back to the previous cycle when Bitcoin was first starting out. This is the accumulation. There was no new all-time high because this was just coming out of the global financial crisis. So give the market some time to adjust and reaccumulate, but you did see 2 significant highs in that accumulation. So here is the accumulation. There's one high, there's another high, taking out the previous high of the move out of the low. So it does go, at least from the last 3 times, we have seen the market push to new fresh highs. In the case here, we're probably looking at a new all-time high within this accumulation zone. And the other times have seen 2 all-time highs within the accumulation zone. I think we'll at least see 1 new all-time high, maybe a pullback, and then the next one possibly on the verge of the next Bitcoin bull market as well. So that's going to be another key signal for the markets as we continue to watch what happens in the stock markets as the bull market continues on for the stock market as well. Very, very hard to believe for a lot of people because they're still expecting a big decline here. But I think, again, as I said back here, we would look back at October 2022 and say that was probably one of the best times to buy. And then again on the channel, I said March of 2023, we'll look back on that and say that's probably another fantastic time to buy. We were so bullish at that low because of the market structure, so the price, and then the market sentiment was so severely bearish with the banking collapses and everything was supposed to collapse, and then the market took off the opposite direction. So these lows for this cycle, I highly doubt are going to break and get closes underneath them. We are on, and I think we're probably lining up for another significant low right now before the market starts to do its thing to go back and test those all-time highs. So for BTC, that leaves us with a couple more things to have a look at. On the way out of the low, which is another reason why I don't think we are going to break back down, we were very strong on the logarithmic downtrend here for the bear market. And then once Bitcoin broke out of that, it tested the zone and continued on. So that was another clear signal that we were leaving the cycle low. So putting that pinpoint area at that cycle low. It's happened in each of the previous cycles. At that time, there was the max pain, the max fear of the bears calling for lower targets, which never happened. You remember you had a lot of people calling for $8,000 and $9,000 Bitcoin and $13,000 Bitcoin. Again, never happened. Can't say never ever, but for this particular cycle, it looks highly unlikely that we will see those prices because of where the rest of the market is structured, which is why we looked at the S&P here. So Bitcoin just buying time before we get to this halving and test that $42,000 level. Now, this is the monthly time counts, similar to what we just did on the previous chart, but just having a look at it in terms of the target itself. If you're going to draw a bullseye on Bitcoin, this is what it would look like. We're looking at the halving date here roughly around April, the 50% level, roughly around $42,000. We have roughly 6 months to go to get to that target. If everything was equal and was balanced in the market, you would just see a nice clean trend go straight to that point, I think. But of course, the markets don't do that. Maybe we see a little swift move down and then a quick move to break back above 32. We take out some of those stops, or the shorts, the bears get absolutely wrecked, and that pushes the market up quick, and we pull back a little bit, and then we sort of move to that next price. So it can happen any which way, but this is the overall target that we're looking at here, somewhere around that halving period, give or take some time, of course, but 42K I think is baked into the cake. It's just a matter of time now before we get to that point. As for the day counts in our 4-year cycle, everything is still relatively on track. There has been no scares. There's been no changes to the structure. We have our 1,060 odd days up, our roughly 1 year down, so you're 360, another 1,000 days up, another 370 days down. We are currently 365 days, or 330 days, sorry, into this part of the cycle. So basically 11 months. We're at October, the low was in November. Like we've just seen in the previous charts, 11 months in is really probably 6 to 12 months out from the market actually going crazy. So time is running out, especially when you could consider we're about halfway through into the breakout. Remember, we looked at the breakout being about 22 months in. We are now 11 months into that 22 months. So we're about halfway through the grind stage of the market, and things are probably going to get more quiet and more difficult to stay with, according to Google Trends. We've seen the trend of the search terms Bitcoin and crypto just die out like who knows what, right? A lot of slow grind to almost no search volume for these two. The positive here is that the search volume has increased over time, but it definitely goes through these really tough periods for the masses to stick around because it's just not exciting. There is not giveaways going on all the time. There's not 20x's, 100x's going on, but this is the time to be investing in the markets. Not telling you which one because, of course, that would be financial advice. Based on history here, you can see that when the market is at its lowest in terms of search volume and interest, that has marked the bottom each time. So you start to see the run up. This is the mania, and the manias do not last very long. You go all the way back to 2013, and that mania was very, very short-lived, and then it collapsed and died out for ages. Just like with the charts, the search terms, the search volume also breaks out of trends. You could chart this if we could get it onto TradingView. But you can see here for November, that was the point where it broke past the previous interest in those search terms. Now, if we could somehow zoom into this area here, you can see the market breaking out in early 2017 before it went on this really big run to the tops. So each of those occasions, it marked the start of the Bitcoin mania, the crypto mania, and it's the stage that things get pretty crazy, pretty scary for those who are in with profits already, because you've got the nutters coming into the market just boosting these prices up. It's the excitement, but we have to take profits at those times. Otherwise, we end up like the retail, the mania, that just hold all the way down because they come in late and expect the market to keep going because it has been going already for 12, 18 months prior. That's essentially what's going on at these cases. You can see that we've already been going here. It'll be 22 months by the time the market breaks out, roughly 2 years. Right now, we've been going for 11 months, and they just think the same thing is going to happen. It's just going to get better and better and better. So here is the accumulation. We usually have a reaccumulation, then the markets just go on a bit of a mania run. Well, as I record this, Bitcoin is going on its own slight mania run up to 28,800. Hopefully it can start to hold above 29, and we can call 32 sooner rather than later. Otherwise, what you can do now is hit that like and subscribe button. Join us, TIA Crypto. This is the free crypto and economic report. This is your home of macro cycle analysis, covering everything: stocks, crypto, real estate. I'll see you guys at the next video for another macro cycle update on Bitcoin and the stock markets. Check out the videos that have popped up here on your left. Until then, take care and peace out.